It is indeed a pleasure to have you here today. Ladies and gentlemen, while we would hope that all eyes on the Banking Transformation Summit, we're also aware of the fact that the world's eyes are on India's Moonshot moment, the Chandrayaan-3, virtually in the last lap now, about an hour and a half away from making that landing on the surface of the moon. What a moment it is for the country, Mr. Kotak.
Absolutely, and it's quite amazing that two major events are happening today. One is the Chandrayaan moment, and I hope India really succeeds in having a smooth landing. And at the same time, I'm looking forward to chess and India becoming the world leader in chess. Can you imagine if we, and I'm keeping my fingers crossed, if we get it both right, we will be at the top of science and knowledge.
Absolutely, at the top of science and knowledge. And here's wishing the team at ISRO and Pragnanda the very best of luck for both those. But since we are talking about the Moonshot opportunity, Mr. Kotak, let me talk to you about the Moonshot opportunity for India's banking sector. You've seen the financial services sector evolve since the time that you took charge, in a sense, of an NBFC and then, of course, the bank in 2003. From your vantage point today, what could be the Moonshot moment for India's financial services sector?
I think if I look back and then look forward, India has come a long way. In the 90s, my biggest concern was the export of the Indian capital markets. That we had a flurry of issuances of Indian companies listing at Luxembourg. And we did not even have the concept of a private placement in India. And it bothered me a lot that Indian companies were listing in a completely unknown exchange with virtually no trading, but companies preferred that to public issuances. From there to now say that we have one of the most active markets, probably highest in terms of number of transactions, to any global player anywhere in the world being able to trade on Indian exchanges, it's a huge step forward. The quality of the equity markets and now the depth of the equity markets should make all of us feel great. But beyond that, I think the debt market has more work to be done. And I think time has come for us to dramatically up our ambition. The financial sector should be the engine which supports India's aspiration. And I'm looking forward to India becoming a 30 trillion economy by 2047. And what does it take for us to get there, and what is the role of the financial sector as we go into that journey?
You know, since you're talking about ambition and aspiration, let me ask you about the appetite of the financial sector. We'll talk about 30 trillion later, but let's talk about 5 trillion because that is the next milestone that we're hoping to clock. In the journey to 5 trillion, do you believe that both in terms of capital as well as in terms of appetite, the financial sector has enough of both?
I think the financial sector is much stronger today than I've seen it. And if we started it, say, if we looked at the first part when COVID really hit us, most of us didn't know what was happening. From there to where we are, I think we've made a significant progress. I think we are actually in a very good shape. The balance sheets of companies are healthy. The balance sheets of banks are very healthy. Capital adequacy is in good shape. And this is the time for India to, while managing risk, really scale up in its aspiration for building new capacities and new capabilities in the financial sector.
When you talk about new capacities in the financial sector, do you believe that we have too few banks, not just too few large banks, but do you believe in general that we have too few banks as we look at this $5 to $30 trillion milestone?
I think it's not just about numbers, it's about scale and capability. And we really need to go up the curve on that. Like, let me give the two areas which we really can do a lot more. Let's take the case of the bankruptcy law. You know, if we really want the financial sector and the banking sector to take off, we really need a resolution process, which we started with good intent, but we seem to be having challenges on the way. How can we have the declogging of the NCLT process, the judicial process? You need quick resolution and much better resolution. The recoveries which are coming for loans which have had trouble are much less than what they should be. Therefore, as India grows, you cannot have a system where the credit cost is so high because of a very high resolution cost in case of a loan getting bad. We are in a Goldilocks period. This is the time, in good times, you get things right which stay with you in the tougher times. So that is one. And second, I think there has been a significant growth in the financing of retail India in the last 10 to 20 years from a banking point of view. But corporate India will also have to gear up for a much larger role in terms of scale. And it is here that banks will have to sharpen their underwriting skills and ability to write big checks. The last thing I want is a corporate which wants to acquire another business in India has to go to an overseas bank outside India to fund an acquisition
So
in
what's
India.
holding Indian banks back? What's the constraint at this point in time, especially when you talk about acquisition financing? And do you really believe that we are going to see big ticket deals, big value deals? There's a lot of talk at this point in time around the role that private equity will play, whether it's in the pharma sector specifically, which is the big deal that everyone is talking about, the potential of Cipla, going through. But what do you believe is the need of the hour in terms of acquisition financing when you talk about the role that Indian banks will play?
I think two major areas where India can do more as the Indian financial sector. One is significant capacity building and addition to the private equity industry in India. Bulk of the private equity financing today is happening by global private equity operating in India. And a lot of them take their leverage outside India because leverage in India is not available to them. So we really need to do two things: dramatically increase Indian private equity firms to get larger. And second is we must get comfortable and confident that Indian banks and financial institutions have underwriting capacity and capability, and they don't need to be excessively protected from the business, which will be crucial for India's growth as we go forward.
So you're essentially talking about regulatory changes to ensure that happens.
My view is that this is over time. India must have the ability to get to scale both in banking and in the corporate sector.
Since we're talking about scale and not just in the banking sector, Mr. Kotak, I want to understand from you how you see the landscape changing. We've just seen this big HDFC Bank deal go through. Do you believe we're on the cusp of seeing a significant amount of consolidation across sectors in India today?
I think we are seeing a lot of consolidation in many sectors as I speak with you. And there cannot be a better platform than to talk about the telecom sector consolidation. You've seen it. You're down to 2.5 players, 2.5 serious players in the telecom sector. You look at the airline industry. I mean, it's consolidated phenomenally. You look at the steel industry. It's consolidated significantly. And essentially, two big players have a disproportionate market share. Therefore, sector after sector, you're seeing consolidation and concentration in fewer hands. I'm not against consolidation as long as we keep the competitive intensity in place. So if you compare banking to these sectors, let me ask you the question. Do we have too many banks or too few banks?
I asked you that question to start with. Which camp do you belong to?
My view is it's not about quantity. It's about quality and making sure there is enough competition. If you look at most of the developed markets, you have got now seriously 5 or 6 significantly large players and then a whole host of smaller players and niche players and specialized players. I think India needs to get more in that direction and at the same time the niche and the smaller players can bring up the competitive element. I think the whole digital revolution is changing the landscape of financial services. Most of us here think about financial services as domain. More and more we need to start thinking about it as technology plus domain.
If you are talking about technology plus domain, I'll get to that in just a second, but I want to just continue on the consolidation aspect because you've seen a fair degree of that within the bank as well. But what do you foresee specifically for the banking sector? You gave us a whole host of other sectors where we have seen a fair degree, some, because players have just exited the market, and we've seen that even as far as the aviation sector is concerned. But what do you believe you foresee for the banking sector specifically, and will you continue to play consolidator, a role that you have played previously?
See, I think don't expect, especially in the public sector, anything major till 2024 middle. But beyond that, I mean, my view is maybe we need 4 or 5 large public sector banks, and beyond that, it should be completely open for consolidation within banking. And we must make rules easier. We must be ready to let some of the public sector banks also raise more public market equity so that their holding goes to below 50%, and a whole host of things to encourage consolidation quickly, because technology otherwise will consolidate the sector in a way which may not be favorable for many of the existing players.
Speaking of possible changes and possibilities for the banking sector, I want to, ask you about what you made of the recent decision by the Mahindra Group to pick up a stake in RBL Bank. And the expectation is that perhaps at some point there will be a review or a rethink on whether corporates should be allowed into the banking sector or not. And we don't know whether that is in any form or fashion on the anvil or will be on the anvil. But your thoughts on that?
I think my fundamental view, and this is not a protectionist view, is one of the biggest issues in Indian banking history goes back to the whole basis on which banks were nationalized, where it was a case of large houses having stakes in banks, and we all know it. Central Bank was Tata's, UCO Bank was Birla's, and you had a situation where there is inherent conflict of interest, even if there is no direct lending. A direct lending by a bank to a business group is obviously not correct. But you can have indirect lending through the vendors, to the service providers. There can be so many linkages which can happen. And fundamentally, banking is a high leverage, high risk business. Not many corporates in the world get leverage at 10, 12, 14:1. And banking is one such business. You have to keep this fact in mind, that such high levels of risk in the system and the contagion which a banking failure creates in a system actually make a strong case of having banks independent of business houses.
So keep the doors shut.
This is my view, because of inherent conflicts of interest and the risk of self-dealing.
Let's now talk about technology, and you talked about how this confluence of banking and technology is actually going to lead to many more changes within the sector. In your experience, as you look at how this is played out today with the collaboration that banks have seen with fintechs, we've gone from that journey where it was whether the fintechs will survive to will the banks survive, to now a happy coexistence of the two and a happy collaboration and partnership of the two. How do you see this moving forward?
I think we will get it to a world of what I call as co-opetition. There will be areas where banks and non-banks, particularly the technology companies, will compete. And there will be areas where they will cooperate. And in that context, I actually feel that banks have been behind the curve. The whole payment space, to think about a Phone Pay and a Google Pay moving to a more than 85 or a 90% market share, while it was for the banks to take it, is a reflection of how nimble-footed players can take the lunch which long-term belonged to the banks. And we just gave it away as a banking industry. And if we are not careful, if we are too much comfortable with the moat we have run the serious risk of becoming a pure utility, with the front end moving to what I would call as the consumer tech players.
So can you get your lunch back, or is that now that boat has sailed, that ship has sailed?
In my view, again, the same issue comes there in the payment space. It's concentration. Two players own the market. So, and NPCI has talked about market share not more than 30%. But when it came time to implement it, they asked for 2 more years to be able to implement the rule of 30% maximum cap. So how are we going to handle the risk of monopoly power coming out of consumer tech is an issue which we need to address. And that is something which is the complete opposite of what you're seeing in the traditional banking in India, which is lots of players, lots of new players coming in, versus monopoly power, which consumer tech has the capability, where volumes just move in one direction. And I think payments system in India is a classic example of how quickly consolidation of power happens.
Given the fact that we're already seeing such a significant consolidation of power in the consumer tech and in the payment space specifically, what can banks do? I mean, does this keep you up at night?
In my view, banks have time on their side, but they've got to use it quickly. And as far as I can see, we really, and that's something which we are doing front-footed, We are dramatically changing the persona of Kotak Mahindra Bank. We are clear. We have to move to be significantly tech first. We have a record number of engineers, as I talk to you, working in the bank and joining on a daily basis. We are changing the whole DNA of the bank as I speak with you, because unless we can get tech and domain in a box concept, we are going to head for a serious risk of becoming utilities.
How challenging is it? How complex is it? You talked about changing the very DNA of the bank to make it tech first. What have been the big lessons along the way as you move down this journey, as you make this pivot?
I think you need to start with a very simple emotion, paranoia. And if you get that emotion right, the rest will follow. Most of us in banking believe that we have a right to have the moat, the regulatory moat, and the fact that we are very comfortable with our current basis of operation as something which will protect us. We need to have the fear of death for us to really get our act together.
A fear of death as extreme as that?
As institutions. I mean, you just have, why is it extreme? Look at what has happened in the telecom sector. There were 13 players. What has happened to all of them? Look at the airline industry. Look at steel.
So you're saying that that could be a possibility if the banking sector doesn't disrupt itself?
Banking sector has to become a significantly more digital player. And the world was physical. Then we started talking about phygital, that is physical and digital, which is physical first, supported by digital. The world has moved to digital, which is digital first and physical supporting digital. That's where I see it go.
You talked about co-opetition and coexistence as well. And I want to stretch this argument to the context of banks and NBFCs as well. And we've seen a significant reduction as far as the regulatory arbitrage is concerned in this space. How do you see this co-opetition and coexistence over the next 5 to 10 years?
See, there is one myth widely prevalent, which is that the cost of funds of banks is cheaper than NBFCs. It's a myth. If you look at the cost of funds of an NBFC, there is no CRR, there is no SLR, there is no priority sector lending. The wholesale market for funds has developed a lot more with the mutual fund industry, debenture market, as also the insurance industry. Therefore, NBFC cost of funds for the top-rated NBFCs is no worse or not significantly negative than a bank. Lower-rated NBFCs cost goes up, rightly so. But for top-rated NBFCs, being an NBFC is not a disadvantage on cost of funds. I think the myth that NBFC's cost of funds is higher is a complete myth. In fact, the top-end AAA NBFCs in most of the times borrow at or lower than banks' rates, and they don't have a huge cost structure which banks have, which is branches, fixed cost, and others. Therefore, NBFCs have the ability to compete on even terms on cost of funds. And that combined with no load of PSL, banks have 40% obligation on priority sector. So it is, I think, level playing for NBFCs today. And there is no question it is lighter touch regulation. The regulation in banking is significantly higher. Therefore, if you have lighter touch regulation, no disadvantage of cost of funds, I can well understand why many of the NBFCs don't want to become banks. And there are new players who will play the NBFC game without becoming a bank.
You're talking about new players in the NBFC space. We've just seen a listing of the newest of them all. What do you make of that? And, how would you describe this as a moment for the industry today, the potential moment for the industry?
I believe the geofinancial services has significant opportunity to scale. And I have no doubt under the leadership of Mr. K.V. Kamath, they will do a phenomenal job. And I have always had the highest regard for Mr. Kamath and his ability to envision and execute.
But what do you believe will be the key challenges that they will have to contend with?
I think it's a marketplace. It's also a leverage business. Therefore, the beauty about a leverage business is when you give out money, you got to get it back. And you're highly leveraged, so therefore your ability for making errors for any financial player is very limited ability to make mistakes. So as long as they follow the mantra, and Mr. Kamath knows this at the back of his hand, I have no doubt Jio Financial Services has a great potential.
Well, we'll have Mr. Kamath joining us in a short while from now. So we'll get to hear from him firsthand on what the vision really is as far as Jio Financial Services is concerned. But Mr. Kotak, let's also talk about the insurance sector, because that is again something that you believe it requires not just disruption but also unshackling in many ways. What is the roadmap that you would like to see for the insurance sector going forward?
Again, insurance are two very disparate areas. One is the life insurance business and the second is the non-life business. And within non-life, again, you have segments which is property and casualty or health. I think each of them has significant potential. What we need to really get on the life business, it's much more a physical business. On the non-life business, it's getting to be a lot more technology and digital driven. And I actually see a lot of innovation possible on the non-life business. I'm very excited about the health business for a country with such low population or such young population. Therefore, the road ahead for both the insurance businesses is looking extremely positive. And if we can develop our life insurance industry further, it will create long-term capital to finance India's capital needs for a 30 trillion. I'm going back to 30 trillion. I don't want to just look at 2 years. I want to look at the next 20, 25 years, how India can be a significant player on the global stage.
You know, you're talking about India being a significant player in the global stage and that $30 trillion aspiration that you just laid out for us. At a recent event where you were speaking, Mr. Kotak, you laid out the priorities, the top 10 priorities that India must focus on. And within that, it was also the role that the private sector should play in being able to address some of these crucial challenges, whether it's the energy challenge, it's the sustainability challenge. What is the role that you believe the private sector can play, especially from a financing point of view? And I don't just mean the banking sector.
Yeah, I just ask ourselves here, you know, we all stay in Mumbai. We know water levels in Mumbai are rising. And if we don't act, we run a very serious risk of the city going underwater. Let's ask each of us, what are we doing about it? Then I ask the same question to a Delhi wala. You're a Delhi wala.
Yes.
So what are we doing to, as a country, to ensure that none of our cities are in the top 10 most polluted cities in the world? Therefore, rather than doing big sustainability concept, let's address the challenges that two of our major cities face, which is Mumbai and Delhi. What are we going to do individually? And what can we do to change the future of these two cities, which are so crucial for India's future? And if we can fix the big things like Bombay and Delhi, I think we'll fix the other cities quite easily.
But the question is how? How and where does the capital come from to fix it? One, of course, is the execution aspect, but it also requires a significant amount of capital to be able to fix both.
You know, I think there is a very big opportunity. India has been one of the leaders in an innovation which I call as CSR. When CSR was first announced, the 2% of profits, I felt this was a backdoor tax. Today, I feel it's one of the best things India has done, because we have created a pool of social capital, which is adding every year for being available to transform the country. And as corporate profits grow, as corporate India gets larger, 2% of profits every year creates a significant pool for us to have disproportionate amount of money go into sustainability as one of the objectives. And I think the money is there. And if you can create a format, for example, CSR combined with a little bit from the government and then an institution which can leverage this money, we have a very potent combination.
Speaking of the road ahead, Mr. Kotak, I want to, before I get the audience to ask you a few questions as well, I want to delve a little deeper into the journey that you've had. And I don't know how many of you in this room know that he would have probably been playing an innings on the cricket pitch had it not been for a turn of events that led him to banking. As you look back at the innings today, before you start a fresh one, Mr. Kotak, in December, what's the big realization? What would you describe have been the big milestones that you're the proudest of?
I don't think it's about pride. It's individually, it's a pride for the country. The financial sector reform which India set off post-1985 and then post-92, and then subsequently in the 98, 99, when the NBFC crisis hit to 2003, to the unleashing of the financial sector thereafter. And then the ability to pull back and get our financial sector back in shape after the post-2008-9 crisis to the very healthy position we are in today. India has done a lot in the financial sector. And when I look at this journey, I feel we have been fortunate products of India's financial sector reform. And there have been so many points of time when we felt we were on the edge of going out of business. But every time we were able to find solutions in a system which over this period was extremely supportive of doing the right things over time. And I still remember we started with bill discounting days in 1992 when we had the first security scam, the kind of stress and fear many of us went through, not because of our fault, but because of a boomerang of accidents coming around, to the NBFC crisis, post-Asian crisis in 1997-98. I remember there was something like 4,000 plus NBFCs in the late 90s. 3,900 plus died. And that people forget it. You remember the crisis at the UTI and many other places. So you saw the evolution of the NBFC sector. Then post-2001, we had another securities scandal. And then 2008, global financial crisis. And one of my big lessons out of 2008 was be very careful reading too much of the foreign media. And particularly...
Yes, keep watching CNBC-TV18.
The Wall Street Journal. I actually became very cautious. Oh, what's going wrong in US? Because the Wall Street Journal said the whole world is going to collapse. I wish I had set up a lot more branches faster than I did, because I was too impacted by what foreign media said about what would happen. India actually rode it well. And India, the pressure came 3 or 4 years later in the terms of the corporate sector crisis. And along the way, I think managing risk and always making sure that, to use a cricketing terminology, irrespective of the wicket, making sure your technique is right. And if you have to have a cross bat, be very careful you have good practice and the ability to hit the shot like a Tendulkar or a Kohli. And if you don't have it, don't use it.
Well, I would imagine that you've tried to do a little bit of Tendulkar and Kohli at different points in time, Mr. Kotak. But, you know, you talked about some of the accidents that have shaped in many ways the evolution of India's financial sector. Today, we're talking about banks' balance sheets being in good shape, cleaner than they've ever been, at least in the past decade or so. What would you worry about? I mean, you know, there can, of course, be black swan events, and we hope that we don't have to contend with any of those. But outside of black swan events, what potential accidents would you be worried about that concern you today?
I don't think I have a concern, but you must always have, in your risk management lens, a question of what if. And some of the questions which come to my mind are, what if this inflation genie doesn't get back into the bottle? What if it just is out of control?
How worried are you about it today?
I would put a 5 to 10% probability of that really not coming under control. And something's changed because there's been so much of printing of money. And you're seeing some of it play out. And every time you feel that things are getting under control, something new happens. So I would look at, what if we're going to be having higher inflation for longer? The target in the US of 2%, or even the Indian target of 4%, is it something, do we change the goalposts because we don't think we can get the genie in the bottle? Or we try and get genie in the bottle? I don't know the answer. And it also depends on each country and the political landscape of that country. I think the rules of the game are changing. Look at the challenges which Europe is facing. I mean, the UK. UK, as I have said, had a history where sun never set on the British Empire, to the situation and the challenges they face today. Therefore, no country should take its success for granted. And right now, China. I think China, from what I understand, is going through tougher times than what we are seeing. Therefore, this is India's opportunity. But India has to manage this opportunity while managing the risks of what if.
You know, speaking of India's opportunity, and I think there is broad consensus that this is, you know, in many ways, all of the pieces have fallen into place at this point in time. It really is a question of execution, and it's on getting the strategy right and moving forward. Directionally, we are moving forward in the right direction. But on that front, when we talk about this being India's decade, India's moment, you know, the things that you're most confident about and the vulnerabilities that you would watch for.
I think I'm extremely confident about the fact that the macroeconomics of India is in a good place. And as long as oil does not go above $100 consistently for a long period of time, I think India has the ability to manage the macro pretty well. If you ask me, one of the most important things India needs to manage over the next 10 or 20 years is unity and diversity. And states and the country as a whole. Because you do see India being a very diverse country. And you have the United States of America, you have Europe. You've seen Europe is not United States of Europe. So India really needs to manage its unity and diversity over the next 10 to 20 years to be a solid, unified nation on core issues. There will always be differences because of the nature of the country, but within that diversity, which we must respect and encourage, we need a sense of unity and purpose of one country at all points of time.
Very well said, sir. Since you laid out the roadmap for the 30 trillion mark as far as the Indian economy is concerned, let me ask you to lay out for us the roadmap as far as the bank is concerned. You know, what is the aspiration that you have for the bank, especially now as you move closer to moving away? And I want to also ask you about what that process has been like for you to be able to start to distance yourself in a way and move away from an institution that you've been responsible for building.
I think one of the most important aspects of any of us is if what you create does not outlive you, then it's not a true success. How do you ensure that the institutional framework of what you create can sustain individuals? I think individuals may start enterprise, but over time, the institution has to be ahead of the individual. And the job of the individual over time is to nurture and let it flourish, and the roles change. So how do you create world-class institutions? And the most telling example, again, is the United States. Once upon a time, there was a Mr. J.P. Morgan. There is none. And the institution lives on for a few hundred years. There was a Goldman, there was a Mr. Goldman, there was a Mr. Sachs, there was Morgan Stanley, of course, is an offshoot of the combined entity. There is a Merrill Lynch. All these were started by individuals and families. They have outlived the individuals and families to be global institutions. And I mean, look at even in the technology space, look at Apple. Most people thought it is Steve Jobs. He's gone, but Apple is all pervasive. So there's so much for us to be thinking about the institutional framework, and India needs to build that more than anything else.
So no Kotak in Kotak Mahindra Bank?
No, I think no. I think the fact of the matter is the brand is Kotak, but it's the institutional brand, and that was again in the spirit of governance. Day one, when we became a bank, we made sure that the brand Kotak belongs to the institution and not to the individual.
So what is the aspiration for Kotak Mahindra Bank? What is it that you would like the bank to be able to achieve over the next 5 to 10 years? What do you see for it?
I think we need to, for the future, we need to learn from the Apples, the Googles, the Amazons of the world, and we need to keep the spirit of the JP Morgans of the world. And how do you get a combination of both these at the same time to create an institution which India will be proud of?
Do you believe that you've been able to do that? Are you still in the process of being able to do that?
I think the institution's journey is, has some way to go. An individual has taken it up to a point, but the institution must grow and flourish.
And I know that I'm not going to be able to get anything more from you on succession, but confident of passing on the baton there?
I think I really would like to see this institution in the famous, which was a Tennyson poem, Men may come and men may go, but I go on forever.
Absolutely. Ladies and gentlemen, well, you know, we look forward to the next leg of that journey, not just for you, but also for Kotak Mahindra Bank. I am going to open this up for a question or two. If you could raise your hands, and please keep your questions very brief and pointed. We'll get a microphone across to you. Yes, sir. Go ahead.
Hi, this is Sanjay Panda. I was one of the few employees when the Kotak Bank was formed, and now in a tech side of a company. My question is that, and I am a Chief Minister awardee for social causes. The CSR things has been come up. That's the question has been come up to Mr. Kotak. The Kotak Foundation and Kotak Karma is doing extremely well for the upbringing of the education for the girl child and other things. What is the future and what is the thinking ahead for those things from, and more about that side?
Yeah. I think, as I said, I think CSR is one of the most outstanding policies which India has. And if companies really implement it with passion and purpose, it is a huge opportunity for allocation of resources by people who can actually run and execute and organize well to make a big difference to society. And at Kotak, in terms of our approach to CSR, is essentially education is at the top of the list, sustainability is very much there, and we are also looking at some part in making a difference on the sports side. So we have kept our mandate pretty wide, but these are the three main areas where we will continue to focus. And we think about it as a pleasure and a duty to make our contribution for building a better India.
Yes, sir. Go ahead. We'll just get a microphone across to you. Can we get the mic here? Yes. Yeah, it's working. Go ahead, sir.
Sir, you talked about healthy competition. And one of the points you talked about is NPCI putting a 30% kind of a cap on payment processing fintechs. As a banker, let's say in future, RBI decides to put a similar cap for bankers. Would you welcome that move?
The good news is we are okay with 30%. We are currently between 2 and 3%.
Yes. Lata has a question, so I'm going to get the mic across to her. Right here. Lata, if you can raise your hand, he'll be able to identify you. Yeah.
I don't want to eat up somebody else's time. Mr. Kotak, actually, I got thinking when Shereen was asking you about your personal journey. You know, you're only 8 years younger to HDFC Bank. But HDFC Bank is what, 7 times your size now? And if you discount the HDFC merger, it would still be 15 lakh crore, I thought, and you would be what, 3.5?
Yeah.
So, are you an overprotective, overcautious banker? If you think back, would you have wanted to be more courageous? What would be your word of advice to the next guy?
I think it's a very good question. You got to keep a context in mind. Between 1994 and 2003, the public sector banks were not allowed opening up on technology. And a new bank with basic technology had a free hand for 8 to 9 years to really build on a technology platform, while public sector banks were subject to unions, restrictions to really go onto the technology piece. And the opening up of technology for all really happened after the first 8 or 10 years, which the first round of bankers, whether it's IndusInd Bank, whether it's HDFC Bank and others, had an advantage. The second big thing, which I think worked for HDFC Bank, is the brand HDFC. You know, we underestimate the power of the brand HDFC in the early stages. So when HDFC Bank was a child, brand HDFC was so much more established. And that, combined with new technology, was a complete open house, which HDFC Bank had, and I would give them credit for doing a brilliant job at that.
Well, I'll take one final question from the audience. There's several hands. Yes, sir. If you can just stand up, sir, they'll probably be able to spot you faster. Thank you so much.
Thank you.
All right, so this is the breaking news situation. Qatar Investment Authority.
So the question is, you talked about various reforms on the financial sectors over these decades. What is your views on the regulatory landscape, what we have currently, and especially in terms of RBI, when we have gone through so many rough patches, and regulator has helped the entire financial sector to be sustained on the businesses. So what's your views, and how do you see that the regulator can be more proactive to help not only the banking sector but also the insurance to take it to the next level of journey of 5 trillion economy?
I think first, there are really two parts. I think the regulator has done an outstanding job, particularly in the last few years, especially managing the COVID era and the turbulence which we saw post that. And keep it in mind the backdrop of the whole NPA crisis which the banking system had. Therefore, in terms of navigating the financial system to the safe shores over the last 6, 8, 10 years, I think the Reserve Bank has done an outstanding job of getting us there. What we have to ask is the question that what will it take us from where we are to where we want to be? That is a separate discussion versus what was right for us, especially in the turbulence of the last 5 to 10 years. So the discussion has to be around how do we ensure all the good things we have learned over the last 5 to 10 years, we protect that, including high quality risk management, continuing improvement in processes. But how do we at the same time unleash and harness the opportunity of India for a 30 trillion economy while keeping our guardrails in place? And what are the capacity building measures we need to put in place for the future? And as distinct from the last 5 to 7 years, which brought us to the safe shores as was required.
So if I can just ask a follow-up on that, sir, which I tried to initially as well. What would you like to put on the table when you talk about being able to build out for the future? Leave us with 2 or 3 ideas that you would like to put on the table for all policymakers, regulators, the industry to consider at this point in time.
I think we need to see the opportunity which an Uday Kotak got from 1985. How do we create such opportunities for many individuals and create an enterprise kind of creativity in the Indian financial services?
Well, Mr. Kotak, speaking of the opportunity that you got and the pitch and the wicket that you've played at, let me ask you to end with a cricketing analogy. How would you like to describe your legacy? Would you see it as a Tendulkar innings, as a Kohli innings, as a Dravid innings? How would you like to be described?
Going forward, I mean, for me, the most important and memorable part of my career, not just the financial career, but my entire life, is the pride that Sachin Tendulkar's coach happened to be my coach well before it, Ramnath Achrekar. Okay? And therefore, please keep in mind, if there's anything I would like to do, it would be to nurture and develop and contribute for the long-term well-being of the Indian financial sector and the Indian economy in whatever role, particularly in the role of a coach, which I learned at the feet of Ramnath Achrekar. Thank you.
So what next then, Mr. Kotak? What could this coaching avatar lend itself to be?
I think my view is that best way to think about the future is to plan nothing.
Well, I think that's a nice way of extricating yourself out of giving me a clear answer. But Uday Kotak, it's an absolute pleasure. Thank you very much for joining us here this evening. We wish you the very best of luck and appreciate your time. Thank you very much.